Hi everyone and welcome to our market analysis videos here at Zenfinex. Today we're going to stay on the stocks and we're going to be looking at a Didi forecast for 2021. My name is Connor and I'm the Senior Market Analyst at the company, providing to you these daily videos on market commentary on Forex and stocks and also educational content. For those who are unaware of what the Didi stock is, I'm going to give an overview of the stock first before looking at a fundamental analysis. Then I'm going to move right onto the chart and have a look at the key levels after a large drop this year. Okay, so an overview of Didi first. Didi Global is the largest ride-hailing company in China. Now, essentially what this means is it's like the Uber of China. And Didi actually managed to raise $4.4 billion in its upside initial public offering, aka its IPO, and that was on June the 30th of this year. So it's a relatively new company. It sold 317 million shares at around $14 per share, up from its original target of 288 million shares. So at the time, before it was listed, it seemed like such a great find for any early buyers in the market. Then we had a situation where pretty much the following week the price plummeted and we're now trading at around $7 per share. The reason for this plummet in the price was the Cyberspace Administration of China, aka the CAC or the CAC, suspended all new user registrations on the Didi's app, like their mobile app, within the country as part of really an industry-wide cybersecurity review. Now, the CAC also removed the removal of Didi's app from all of China's mobile app stores, and that app accounted for 98% of their total revenue in the previous year. On top of this, we have China also passing a new data security law, where collecting excessive information, personal information, and big data-enabled price discrimination was prohibited. This starts on the 1st of November as well. Then, on top of that, we have the US-China tensions, where it could mean that USD lists most of the Chinese stocks that they have available, which again is going to devalue Chinese stocks, and especially ones like Didi as well. Now, I know that off the back of that, it seems really like quite an awful investment with all the regulations surrounding it. It almost seems it's a bit crypto-esque, really. But they aren't actually the first company in China to have their app suspended. I think it was Momo, a dating app, and Tencent both had their apps suspended a few months ago, but are now back up and running, and the share prices followed with it. Didi's orders are increasing 3% more than the industry average. So if they can overcome these regulatory issues in 2021 and get the app back up and running, their stock could really take off. But I will stress that it's going to take the app getting back up and running this year for there to be any movement in the price to the upside, or a substantial movement in price to the upside. Let's take a look at the chart anyway. So there's not too much to go on or base analysis off on the chart. I just wanted to zoom right out. This is all the data we have because it was only listed on the 30th of June, and you can see how the price opened up at around $18. Which really was quite poor, considering now we're trading down at around 7.5. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. And we're actually around pretty much the lowest it's ever been. It's hard to do any sort of moving average stuff, especially on the daily chart. I mean, we don't have enough days to have some sort of moving average. But if I move on to the 4-hour chart, we can see something a bit clearer in terms of price action. And you can see that the market at the moment, we crossed below the 50-day moving average in September. And you can see now that really the way we can best trade it is we can use this as a potential support level. And we can use, if I'm being completely honest, this as the absolute maximum. In my opinion, I think this is the maximum that price could go to in 2021. It's going to need some positive news surrounding the regulation issues that we have in China at the moment. But maybe a switch to value stocks as a whole are going to help. You can see we have respected it before. So potentially, if you think the regulation issue is going to get worse, and I stress it's important to monitor it, then we could get a trade from when a retest of the 50-day or 50 moving average on the 4-hour chart. And I think potentially we could go as low as $6 for $2021. Around $6 would be the low that I see it at. I want to stress that as a whole, I believe this stock really would be great for a 3 to 4 year hold. It's just because this video is for a 2021 forecast. I think we're going to have some more short-term pain. What we need to see in terms of the technical levels, you can see we're trading. The RSI really is pointing to the downside, and we're getting some rebounds off of this support level. But that's as positive as it gets in terms of the chart, because we are in a clear downtrend. If I zoom in, apologies, let's get rid of that. If I do zoom in, there's potential for a selling opportunity up at around $8, around this order block where we broke this structure low to the downside. So again, it kind of marries up with this moving average play. We could sell from here, a stop loss just above, and we can aim down towards that $6 level and create a new low. Around the $6, I'd be a long-term buyer of this. I believe that they can get over these regulatory issues, but I think, again, it's going to require some extensive research and really being on the ball in terms of the updates on whether they can get their app up and running. So that's really it for Didi in terms of the chart and the key levels. I think that we're probably not going to see $10 for the rest of this year, if I'm being completely honest. But if we do break above this 50-day moving average and the outlook, we could start to see a bit more of a breakout like we saw here back in July. But for now, short-term selling is the way to play. Selling on any impulses to the upside, keeping an eye on the news and seeing if we can get that app back up and running, or if they can get that app back up and running as well. If you like this video, everyone, make sure you subscribe to the channel first of all. You're liking the videos. We appreciate anything you can do which is going to help boost the channel. Likes, subscriptions, any comments as well. Does anyone have any opinion on where they think Didi is going for 2021? People might know some news that I don't, but on the face of it, it's not looking too great for the near-term outlook. But I think this is a sleeping giant stock that's going to take off beyond 2021, 2022 and onwards. That's it for today's video. I hope everyone has a great trading day, and I'll catch you all for the next video. Take care.